Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance, and if you want to join our community, you can go to finding-value.com, where I dive deeper into all these topics, sectors, looking for investment opportunities, sharing my opinions, my strategies to the markets. It's a three-pillar approach: ratios, technical analysis, and market cycles. If you're interested in learning about that stuff, we do have a special going on. Special is the coupon code. It's $25 for the first month only. Then it goes to $50 after the first month. And if you'd like to swap to the yearly membership, you can enjoy further savings, even if you're from the monthly, or go directly to the yearly. You can type in special as a coupon code. It's $500 for the year. All right, diving in. Investment wisdom. The goal of investment is to find situations where it is safe not to diversify. What does that mean? Well, I've had those feelings. I had the feelings in September, October of 2020. So I also had that feeling in March, April timeframe with gold and silver when they announced that they were going to do stimulus. When they announced they were going to do stimulus, I said, holy crap, this is exactly when gold and silver go ballistic. And that's where I found the situation to be rare because they were doing the stimulus. That situation happened exactly the same as in 2008. So I saw it before. I recognized it. I put a bunch of money in gold and silver junior companies. I know, a little bit risky. Made a whole bunch. And then I saw oil that was lagging behind, and I swapped it into oil in September, October of 2020, mainly October. A little bit of luck, yes. I'm not saying that I knew exactly that that was the entire bottom, but I was looking at companies and I was saying, how the heck is this priced at $168 million? This does not make any sense as a market cap. And they previously made billions in revenues, billions in profits, earnings per share. I mean, everyone was so scared. And rightfully so. Some of these companies in the oil equities had a lot of debt. And I think people were looking at how risky that debt was, and it was sold off to pennies on the dollar. The debt gave me the opportunity and the low commodity price. Not saying that that was necessarily safe, but it was an opportunity. So it's a double-edged sword, that debt is. It can provide massive upside potential if the commodity price comes back into favor. It is the reason that you have that opportunity to buy pennies of the dollar, pennies on the dollar, and how cheap it is. That's the double-edged sword. The double-edged sword is it got that cheap because of debt, but it also can bankrupt the company because it has debt. So, yeah, that's things that you kind of have to manage. And there were a couple companies that went through bankruptcy. I was caught up in. I've been caught up in a couple. They were not very large positions, and I made a whole bunch back after they came out of bankruptcy. I put money back into it and killed it. Absolutely ripped it. Some of them had warrants too. If you want to look at one of them, Cord Energy was one of the companies that it turned into Cord. I think it was, I can't remember the original name, and then it turned into another name, and then it went into Cord Energy eventually. You could probably look at the history of it if you want to know. But I had a bunch of warrants in that from the bottom, and I made an absolute killing on that, even though I lost money in the beginning of that. Coming down, the current situation. The U.S. is preparing $2,000 stimulus checks. Japan is preparing a $110 billion stimulus package. China has approved a $1.4 trillion stimulus package. The Fed is officially ending QT on December 1st. The U.S. is issuing $1.9 trillion in treasuries per year. Canada is restarting its quantitative easing program. Global M2 money supply is at a record 137 trillion bucks. Global rate cuts are at 320 plus over the last 24 months. In what world is another wave of inflation not on its way? Well, that's generally what happens at the beginning of these inflationary moves. There's all this stimulus. So they stimulate, the inflation goes up, it peaks out, it cycles back down, and then we have to pump the system again. And to me, this looks like we're pumping the system again. You can see it in the charts. You can see in certain sectors that things are bottoming, and they're all inflation sensitive stuff that's bottoming. And then all this is coming out. You can also see, and this is going to get real interesting, in interest rates. Because if they pump this, I think they're going to continue higher, but I don't know if they have a choice. All the debt in the world, they can't let the liquidity in the system go down and cause a debt problem. Debt problems are deflationary. And the rule book here, I think, is inflate your way out of the debt. So if that's the rule book, I'm in the inflation sensitive assets. Alfonso says, I'm not much of a diagonal trend line guy, but look at this breakout in Latin America, ILF, breaking out to multi-year highs. And there is a horizontal going across here too, if you want to cut through that. It's starting to break through that as well. A lot of the Latin America, a lot of the emerging markets, they look pretty good. They look pretty good. A lot of good opportunities out there. Barbell Financial, a buddy from college reached out, got laid off as a manager at Meta, made $280,000 and can't land a new job. His mortgage is over $6,000 a month. Said he runs out of money in 3 months. Has a wife and 2 young kids. He's usually cocky but sounded scary. You never think it'll happen to you. Well, that's a life that he set up. I don't ever want to be in that position in my life. So the question is, how do you never put yourself in that position? If I lost my job, I could probably go for the rest of my life without worrying about money. That's a guess. I've put in place, I'll put safeguards, more resiliency in my life, and that's what gives me peace of mind. It's not buying a Lamborghini. It's not buying a Porsche GT3 RS. Could I do that? I could. And I'm sure a lot of people in my situation would. But what is that going to get me? Now, I don't have a very, very expensive house. I have one that I would say I'm happy to live in and I'm proud of. But I don't have a multi-million-dollar house. I don't drive fancy cars. I don't wear nice clothes. I don't wear nice shoes. I just wear regular stuff. Um, and I'm very content with that. What I get with that is that I don't ever have to live through what this guy is going through. I don't ever have to do anything near that. I feel really bad for people that are going through this, but at some point, you need to sacrifice in the beginning. So what I did is I sacrificed my 20s to build the resiliency for the rest of my life. It's not like I sacrificed much of anything. I didn't buy a Mercedes. I bought a cheap little economy car. The only argument that you'd have against it is that I could probably get hurt if some other big SUV were to hit me. So that would be an argument for not buying it. But I just didn't spend money where I didn't think the value was. And what it did is it provided the largest cushion in my life to never go through this type of thing. And I'm not trying to put this person down by any means. I have a wife, I have young kids, and I don't ever want to be in a situation where I only have 3 months of savings left. I have saved a fortress between me and the scary outside world. Um, Precious metals, I mean, all sorts of stuff. There's a fortress between me and misery. And I did that all on purpose. It doesn't include Porsche GT3s and Lambos, though, unfortunately. Great Marti, Japan's 10-year yield hits 17-year highs. Bank of Japan continues to refuse to raise rates and hints at the very large stimulus package. Sayonara. So I wanted to pull up JP10Y because I see these charts. They just show like a year or two or three in these, and I'm like, I can't tell what this is. Look at this thing, guys. That's a double bottom if I've ever seen one. We had a declining interest rate environment coming down the 2000s, the 2010s. Interesting in 2016, and then a double bottom in 2020. Do you know what else was a double bottom in 2016 and 2020? Copper. Copper was a double bottom. Iron ore, a lot of base metals, a lot of commodities. In fact, let's throw it on top. I don't know if how well it will come up. Let's put on copper on top of this. Oh, there's copper. You think 10-year yields and copper have anything in common? They do. Let's look at iron ore. SLX, which is Vanex steel. Yep, same pattern. Same pattern. You guys see that pattern? Rates coming on up with SLX and all these other ones. COPX. So when I started looking at all these things, a lot of people focus on supply demand of a particular asset class. I hear it a ton in uranium and oil and all this other one. And I watch it too, don't get me wrong. I look at it. But does this chart and the way that yields overlaid on copper equities and steel equities, is that saying it's a supply demand characteristic? It doesn't. What this means is that it deals more with currency exchange rates and the value of those currencies than anything else. Yields going up means that people don't want to hold bonds. And then eventually, I think if rates get high enough, that they're not going to want to own the equities either. I don't know what the Japanese equities index is. We could do Japan ETF, so EWJ maybe. I'm willing to bet if rates continue higher, that this could hit some headwinds. This is Japan ETF. It'll go up until rates hit a certain level, and then I think it's going to hit some headwinds eventually. Eventually. Guppy says, fun fact, XOP is now outperforming Bitcoin for 2025, and we all know that energy is the crappiest asset class out there. Let's see what that looks like. I haven't really looked. So XOP versus Bitcoin. Oh, there it is. So 2025. Oh, yeah, we're like right real close on that. It's just slightly up. But what we're looking for is a bottom here. We're looking for a bottom in energy versus Bitcoin, and I think this is probably what it's going to look like. This is going to come across. That double bottom we saw just recently. I think this will be a bottom, and this will be a bottom, and then we'll come all the way up, pause there, and then go up. Or it'll pause in this box there, slightly above, slight at the line, or slightly below. It'll look exactly like COPX. So this one, you can see the double bottom, and then the breakout, and then it paused above it, and then broke out. This pause is known as an A, B, C corrective phase It's wave one, wave two. That's what it is. It's an Elliott wave theory. SLX did something very similar to it, double bottom, and then the pause. So what we're looking at is the right-hand side of XOP putting in that double bottom there. And that's the opportunity. Usually on the right-hand side here, you'll get a trend line that breaks, which we've broken. That's why we've launched higher there just recently, because it's breaking the downtrend. And this is looking ready to go. We also did a little bit of a slingshot potentially. So if you draw this across here, this is resistance and support. Whenever you dip slightly below that support resistance area, you can get a slingshot move upwards, where it just means that you could move pretty quickly. So yeah, XOP looks very good in relationship to Bitcoin, and this could be a combination of Bitcoin moving down and XOP being more resilient, or heading higher. It could be a combo of both of those things too. Let me look at XOP real quick just by itself. Yeah, XOP looks good. It's a shoulder, head, shoulder, bottoming pattern. I think we'll eventually break that. Give it time. I can't time stocks. I don't know anybody else who can either. Pricing is our game, Warren Buffett. Well, what does that mean? Pricing is they just solely go off of value. That's it. They don't try to time it. When the value gets good, they buy it. That's it. Other people, they try to time things. They use technical analysis. They don't even know like anything about the companies that they're buying even. I'm a little bit of a hybrid. What I do is I try to look at these very long-term looking charts like this. I don't play the little wiggles like this. I look at the overall structure of this entire chart going back to 2011. And then I try to recognize like a falling wedge and then some bottoming pattern that occurs, and then I buy in the area that's the bottom. It doesn't mean that I am the all-knowing being and get the absolute little bottom tick. I generally get in the area of where things are good. And then I ride it for a very long time. And that's where all the money's made, in my opinion. The money isn't made in the small little individual moves like this move here, and then you sell it, and that move there, you sell it, and then you ride it up and you sell it. Maybe they ride it, all the way up here or up here or up here. Who knows? I just play the whole big long move. And what I see is I see commodities bottoming and moving into a gigantic bull market. So that I think this is just going to go up for years, like probably maybe even decades. Now, how do I know that? I don't know for sure the exact length, but you want to get in these bottoms if you can, like on the corner there, or over here even. Sometimes you can get a little bit early. Remember, this is a bigger pattern. Some companies have smaller patterns which cycle faster. So if you're in the short term, there's little double bottoms that they do, and this could be like 6 months to a year down here, versus this one's a couple 4 or 5 years here, because it's a bigger pattern. But you should be cognizant of the bigger pattern, and if you can get in these areas here and you can sit, if you get some of these smaller companies, maybe not like an ETF like this, you can make 40, 50, 60, 100 times your money. And I just don't know of any other strategy that can do that. I just can't find anything. So I focus on the long term, and then I dive into entry points on the shorter terms. It doesn't mean I'm perfect on my entries. I try my best. I used to trade on shorter time frames, but I'm done with that. I like the bigger picture stuff, and I make a lot more money doing it. Here's David Jensen on silver. So it says all LBMA forward bilateral contracts are based on spot bilateral contracts. And forwards are only a small portion of the overall contracts. LBMA is not a centralized exchange like the COMEX. They can't force majeure to cash settle like the COMEX. It will be a messy situation if they can't get physical metals to fulfill their contract obligations. The LBMA effectively has zero physical silver free float right now, despite getting silver from the COMEX. The LBMA is living hand to mouth. Whatever physical silver the LBMA is getting right now is already gone out for delivery. LBMA is screwed if you take COMEX concentrated naked shorts into consideration as well. So that's the situation in silver and LBMA from David Jensen. What are my thoughts? I don't really worry about this stuff. Everyone talks about the short term, short term. Guys, I entered this stuff. I just bought it. It was so cheap. And then I knew stuff like this was going to come eventually. Now, is this the time? I don't know. I don't really care. It doesn't matter to me. Everyone is so worried about the short term and always talking, oh, it's going to do this and they're going to default and they're going to do this. And what do you think the price is going to do? Guys, it doesn't matter. It's going to come. I mean, every solution that I see in the world is electricity-based energy solutions. Silver and copper are needed for those electricity-based solutions, whether it's solar panels or electrical connections, circuit boards, transmitting electricity, which is very much copper, aluminum. I don't see any way that the pricing of copper and silver and whatever can go down. Like it doesn't make any sense to me that how it could go lower. You could get a recession, yeah, that could happen, but it would be temporary. So what I mean is, I don't know, I can't think or conjure up a solution to permanently destroy copper and silver outside of one area. You'd have to make graphene, and it would have to be incredibly cheap. If that does not occur with graphene, then these things are going to have to go higher to produce more. And with the demand that I see and all the solutions going to electricity-based stuff for the energy uh, that I see coming, we don't have enough. We need so much more silver and so much more copper, and the projects, at least in copper, they just don't exist. They don't exist. So between now and 2030, this is all going to play out. And people are so worried about the short term little market move. It's like, guys, we've already bottomed. Like steel's bottomed, and same with copper. This is a bottom here. It's going, it's running already. And I'm not saying to go buy this particular copper ETF. I'm just saying, like, we're in motion here. The bottom's in, and the bottom was 2020. We are now in a massive super cycle, and people don't even know it. It'll become incredibly obvious when this just continues to go up and up and up. And what is scary here is, I don't know, from a supply standpoint, I'll just say this. I don't see how the supply is going to grow, and it's going to have to be through substitution. And then substitution is going to be real tough. That's what I'll say. But it's coming. It's coming right front and center. Ralphie says money is something, Bitcoin is nothing. Those who understand money understand something. Those who understand Bitcoin understand nothing. I thought it was kind of funny when I read that at first. This is what a bull market looks like. So they got all these things: sector performance, 2025 performance, and the 14-week relative strength indicator. This is just plotting that things are strong and that their performance is good. It's positive. People call this a bull market. You know what I call it? Inflation. It's inflation. That's what I see. Giant oil fields with 500 million barrels of recoverable liquids account for 75% of global production. The average length of production of these monsters is 66 years old. Yeah, we're not finding these new monsters, guys. They don't exist. And a lot of people say, oh, but there's a lot of reserves in oil sands, a lot of reserves over in Venezuela. Guys, that's not going to produce the bulk of the oil. I mean, it might in the future, but I don't know if it can replace the flow rates that these big fields have. These big fields, they're pumping, man. They're pumping a ton. Gawar is, I think that they're at like 3.5 to 4 million. I think it peaked at like 6 million barrels a day. That one field, that's what Canada in its entirety, I think, produces around something like 6 million barrels a day. And that's just one oil field. So this would break commodities Twitter. Hang on to your hats. So this is SLV handle is coming here. So he's projecting that we have a cup and handle in GLD, and that's SLV could do a cup and handle. Maybe we put in a consolidation. Now, last time we put in this consolidation here, that's when oil ripped and fertilizers ripped and all that, and steel and iron ore. If we put in the handle, I think that's what's going to happen. We're going to see a rotation for a little bit, if that were to play out that way. Japan just killed the global money printer and nobody noticed. It says the most dangerous number in finance right now is 1.71%. That's Japan's 10-year bond yield. Highest since 2008. Here's why your retirement just got obliterated. For 30 years, Japan printed infinite money at 0% rates and exported it worldwide. 3.4 trillion flowed into US treasuries, European debt, emerging markets. This invisible bid kept your mortgage cheap, your stocks inflated, your government solvent. November 10th, 2025, the bid disappeared. Japan's yield hit 1.71%. They're pumping 110 billion stimulus into their economy while debt sits at 263% of GDP. The math just became impossible. At 1.7% rates, Japan pays 27 billion more in interest every single year. Here's the extinction event nobody sees coming. Japanese pension funds are pulling 1.1 trillion out of US treasuries right now because keeping money in America loses them money after hedging costs. The largest foreign buyer of American debt is becoming a seller. When Japan stops buying, interest rates don't stay flat, they explode. US 10-year yields will jump 40 basis points minimum from flow dynamics alone. Your 7% mortgage becomes 8%. Corporate debt refinancing costs spike 60%. Zombie companies holding 3 trillion in junk bonds start defaulting in waves. The yen carry trade just reversed 1.2 trillion in borrowed yen funding. Crypto, stocks, emerging markets must unwind. Every hedge fund, every momentum trade, every leveraged bet built on free Japanese money is getting margin called simultaneously. This breaks in 3 places. Stock valuations were built for 2% bond yields forever. At 3.5% yields, the S&P 500 fair value drops 35%. Emerging market currencies collapse without Japanese capital inflows. Europe's debt crisis returns because Italy and Spain lose their silent buyer. December 18th, the Bank of Japan meets, 50% chance they hike again. If they do, sell everything not nailed down. Your 401k doesn't price this in yet. The Fed can't stop this, no central bank can. The world's biggest piggy bank just cracked open and the money is flowing backwards. Position accordingly or get destroyed, in his opinion. For Shinaka. We've got Sam here after a brutal multi-year bear market. Commodities triggered a fresh long-term buy signal in September. The last time this happened was in fourth quarter of 2020, after which DBC rallied 140% over the following year and a half. Do you have enough commodity exposure? And I am going to say confidently that I do. I'm ready for this. And I think we're going to start here. It's going to get moving here soon with commodities. And then Katusa says commodities are priced for a world that doesn't need them anymore, right when we need them most for energy transition. Commodities at 0.08x emerging markets means the market thinks we've solved scarcity. We haven't. Every EV and data center says we're about to find out. Commodities are still dirt cheap. Here we are. Let's get this thing rolling. The first move is a move higher and then a flag pattern, which is what we have. This looks fantastic. Coming down, and I think that's all I've got for today. So that's where we're going to end it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like, especially with the coupon code. And that's all I've got for today. So we'll catch you next time. See ya.